Hello, and welcome to the webinar, The Compliance Complexities with Hybrid Work and Its Impact on Culture. My name is Eric Wallace with Argyle, and it's great to have everyone joining us today. I have a few administrative details to share with you, and then I'll turn things over to our esteemed speakers. First, we'd like to thank UKG for their partnership with today's event. They've been wonderful partners to Argyle, and they're committed to providing you with valuable content and a great overall experience. Thank you again to UKG. We appreciate you joining us today. We welcome you to stay connected during today's event. For those of you who are active tweeters, please follow us on Twitter at Argyle Exec Forum, and be sure to follow Argyle on LinkedIn for special announcements. I also wanted to take a moment to touch on our content neutrality policy, which we've curated based on the feedback we've received over the years from our members. We've worked closely with our speaking faculty to ensure that you receive a set of balanced and neutral viewpoints during the session today, and we appreciate our members' support of this policy. Finally, and most importantly, we want to hear from you, so please submit all questions that come up during today's event into the chat section of the interface. Following the discussion, we've set aside time for our speakers to weigh in on your questions. Now, without further delay, let's begin our discussion. We are pleased to have our panel here with us today for our webinar. Welcome, panelists. Karina, over to you.
Hi, everyone. Thank you for your time and thank you for being here today. We are extremely fortunate to be joined by a powerhouse panel who are incredibly well-versed in the compliance challenges that organizations are facing today, specifically with regards to remote and hybrid work. So I am absolutely pleased to welcome our first panelist, Dr. Martin Armstrong, who is the VP of Payroll Shared Services at Charter Communications. In this role, he oversees the payroll strategy and execution for over 100,000 employees. He is also an esteemed board member of the UKG Workforce Institute. And prior to these roles, Martin has held executive roles at Time Warner Cable and Caesars Entertainment, and is also a retired U.S. Navy Supply Corps officer. Thank you for being here with us today, Martin.
Thank you.
We also have Robert Winagel, who is a senior compliance advisor here at UKG. He's a California-based attorney with extensive experience providing companies of all sizes with advice regarding employment compliance, data privacy, as well as the future of work. So all topics that are intricately tied into our conversation today. Thank you for being here.
Thank you, Karina.
All right, so before we dive in, we have a list of questions that we receive regularly from our customers and prospects with regards to how to best handle and navigate the future of work. So what I want to do today, before we dive into our questions, is just spend a couple of minutes doing a brief overview of what we've seen with regards to the world of work, particularly with regards to where and how people are working. I do want to preface this with the recognition that about 80% of the global workforce is unable to work remotely, unable to work from home or in any type of a hybrid capacity. So we definitely do want to recognize the fact that this is a smaller population, but it is oftentimes there's different companies that might have some part of their workforce that's able to work remotely, some that need to be in person. That is something we'll be addressing later on today. But what we saw is that at least for the organizations who had workforces that were more mobile and that were able to work from home, we saw a dramatic number of people that began working from home, of course, due to the COVID pandemic, right? We were required to. This caused a lot of shuffling and a lot of headaches for all of you in HR. But what we saw is that for the majority of organizations who did adopt a hybrid or a remote model, the vast majority of them plan to continue to do so in some type of capacity moving forward. So there was this great Mercer study that found that about 70% of employers who were offering flexible work programs in 2022 plan to adopt a long-term hybrid model. Now, of course, hybrid could mean a variety of different things, so we don't know exactly what that means, but obviously that means a mixture, a hybrid of some in-person as well as some in-office work. We also see that about 20% are planning to return to a fully or almost always office-based model. And then there's about 10%, so a small minority, but a substantial number nonetheless, who have decided to adopt a virtual first, fully remote or distributed model. So this lays a little bit of the landscape in terms of how many organizations we're really talking about here in terms of dealing with the compliance challenges related to hybrid and remote work. And what we see is that a number of them, right, 90% of organizations will have some type of hybrid capacity if they're able to do so. And the reason that they've chosen this route is primarily because people want it. We see from ZipRecruiter that job descriptions that have remote in the job description get about 300% more applicants than those that are primarily office based. And so we know that this is something that has changed within the landscape. This has changed within the world of work. People really value their flexibility. They value their work-life balance. And in many cases, they experienced through the course of the pandemic that they had the opportunity to work in this way and that they liked it and they wanted to continue to do so. There's also been some research that has shown that working remotely or in a hybrid capacity can lead to increased productivity and increased innovation, as well as the potential to reduce employer costs if there are these very hefty investments in office space and things like that. However, there are some real challenges to working remotely or working in a hybrid capacity, especially with regards to digital distractions, as well as virtual overload and the feeling of being always on. And, when your work is in your office, it's right upstairs. It can be challenging to fully disconnect once the day is done. And another really, really big piece of this, and the one that we will be focusing on for our conversation today, is the fact that there are some very legitimate compliance concerns that employers and HR leaders need to be aware of. So with that in mind, we're going to go ahead and dive into the panel. So first and foremost, I want to make sure that we're all on the same page here. So if employees are working remotely, Robert, I want to hear from you first. Does this mean that we should let them work from anywhere in the world?
Should or do you want to? Two different questions. There are definitely compliance issues there. I think short answer is no. We should definitely distinguish between allowing employees to work remotely or work from home, and then on the other hand, allowing employees to work from anywhere. If we allow employees to work from anywhere, then we have to make sure as organizations that we're set up to ensure that we're compliant with employees working anywhere in the world. I don't know of any corporation that is. If you, for example, have employees who say, great, I can work from home now. That means I'm going to take a trip to Europe for 6 months. Personally, for them, they may have to get a visa. They may have to get a work visa. A lot of the times in the EU, you can travel around for 90 days without a visa, but that doesn't necessarily mean that you can travel around and work wherever you want for as long as you want. There's implications there both for employee compliance and making sure that as organizations, we're following the employment laws of the land for wherever our employees are. And also as organizations, making sure that we are paying all the appropriate taxes and following the appropriate tax laws of the jurisdictions where our employees might be. Because if we have, for example, now 100 employees working from Florida that we never had before, as an organization, that might mean that we have to pay some type of business taxes in Florida. We have to get business licenses in Florida and things like that. So there are implications there, both for employee compliance and for tax compliance for immigration. There's a lot of implications that go along with employee movement. The first thing that we should do as organizations is really make sure we know where our employees are if they're working remotely. So have some type of policies and practices in place that require employees and managers to notify the organization, to notify HR when their employees are working remotely, when their employees may intend to move to a new state, right? Or go and work remotely for some time in another country. So as an organization, we can have that data and then start preparing ourselves from a compliance perspective. Martin, you probably have something to say about that. There's a lot of payroll implications there.
You bet. I will tell you, to add on to what you just said, employers definitely need to have some type of automated system. So if I'm an employee and we're allowed to work remotely, I should go in to this automated system. Hopefully it's on employee self-service or something, and say, hey, Martin wants to work remote. And then it should say where, and maybe some other questions. And that should be kind of a workflow, whatever that response is, this mechanism, to a couple of different areas. One is HR, two is legal, and I would say three is payroll. Because employers need to figure out, one, if they are authorized or have been registered to do business in wherever this person says they want to work. And if not, they need to, and if it's approved that they are able to work in this place, they need to file, a number of papers and documents to the jurisdiction in which this employee has been authorized to work, so they can set up shop, so to speak, which is just setting up employer accounts. So unemployment taxes can be paid, for income tax if they're in states with an income tax withholding, that can be remitted, etc. And the reason why legal needs to be involved, and I'd say corporate tax as well, is whenever you set up employment accounts, like what I just mentioned for unemployment and state income tax withholding, most states will automatically trigger other curiosities. Oh, well, company ABC is in this jurisdiction. They just told us that they wanted to set up employment tax accounts. What about other taxes, like sales and use tax, like property tax, maybe even corporate income tax that might need to be looked into and then ultimately reported by the same employer? So definitely there should be some type of automated workflow request form for employees to go in and say, I want to work remote, and say specifically where that is. And if all that happens,
good to
yes,
keep in mind that these government agencies talk to each other. So if the unemployment board finds out that someone was working in the state, then the workers' compensation board might find out too, and the tax board may find out too, right? So we want to make sure that we're compliant across all of the different areas where we have to do business.
Yeah, for sure.
And have either of you dealt with significant challenges in terms of people relocating during the course of the pandemic and maybe not telling their manager or HR?
Yes, and it tends to be employees who have decided to travel, right? Most of the time when they decide to move, someone in HR and payroll gets that notice, right? Because their paychecks need to show up to a new place, their W-2s need to show up to a new address. So most of the time, I don't see a lot of issues there. There definitely could be employees who are kind of gaming that because they might live in a state where there's no income tax, and they want to move to California, but they don't want to pay income tax in California, right? So there are definitely hypothetical issues there. I have not seen any. I've seen more employees who decide to take a trip to Ukraine and get stuck in Ukraine. And now we're like, wow, nobody even knew they were in Ukraine. And now how long are they going to be there? I see them more on the international kind of travel and movement side. And there are definitely issues with respect to taxation and employment compliance there.
Fantastic. So let's dive into that a little bit more. We've touched on the challenges of international travel. What requirements do states impose on employers with regards to withholding state and local income taxes from employee compensation? Martin, can you dive into that a little bit more, please?
Absolutely. So states adopt what's called source income, and it simply means if you have an employee in that state that is earning their wages while they're in that state wants to have withholding against the compensation paid to that employee, because the source of their income is derived while that employee is in that state. And so because we don't have a standard system that all states follow, there could be different rules. There's reciprocity agreements where states have agreements between neighboring states that say, even though Martin works here, but he is a resident of your state, normally I would have withholding based on where I work. But this reciprocity agreement says, well, we'll just withhold where I'm a resident of and bypass where I'm working at. And that's a reciprocity agreement that a couple of states have with each other. They're neighboring states for sure. And so there's other states that say, if Martin is working in a state that he does not live in, but his resident state has a higher tax rate, then he will pay two tax rates. He will pay the full tax rate for the state that he's working in, presumably the lower tax rate, and then the difference will be paid because my resident state has a higher tax rate. I'll be paying the difference to my resident state. So my paycheck could have two state withholdings for my resident state and the work state if my resident state has a higher tax rate than the work state. So this system is really confusing for a lot of people. And if you work in a state that has locality income tax withholding or school district tax or some type of city tax, that is also something to consider. So, you know, when you have a person who wants to go and let's just say go to Pennsylvania because they have family members in Pennsylvania and maybe they were in Florida before. Well, not only are there state income tax withholding in the state of Pennsylvania, but also locality taxes. And there are a number of states that have locality taxes that all this should be considered. And again, as we mentioned earlier, your employer must have a registration or an employee account so they can pay those applicable taxes to where you're working at.
I will say there have been some significant legal issues here that arose since COVID, because there are some states that have attempted to continue to impose personal income taxes on people who may have been working in their state and then began working remotely because of COVID in a completely different state. New York, Massachusetts, a few others in the Northeast. And it's been a big issue for New York. There was a Supreme Court case that was not ultimately decided called New Hampshire versus Massachusetts that addressed this. There's a constitutional issue that is pending with respect to those states that are trying to impose personal income taxes on employees that might not be there for the entire year. It is not settled, but it is definitely something to watch for those employers that may have large remote workforces now that are in a different state than they used to work in, or in a different state than their headquarters.
And what are some of the potential consequences of not keeping up with this process and not being aware of where you need to be paying taxes to?
Well, essentially, if the employer does not withhold the personal income taxes correctly, they could get double charged for those and get legal penalties for those.
Yeah, I would say it's very likely that when states come fully back into work and they begin doing audits, it's very likely that your company may get an audit and may be deemed that withholding has not been occurring on employees that they know have been working there, and the employer will end up just paying the taxes that they should have withheld on behalf of the employee. So they'll definitely get a notice. You know, one other thing I also wanted to mention too, because of this whole source income, we have a lot of states that when we talk about equity income, like someone gets stock options or restricted stock units, if when you get granted those options or restricted stock units, during the grant period, when you're vesting, if you're in a state that is new to the company, but you're working there and it's part of the vesting period of the shares that you've been offered, that state, when it's time for you to exercise those shares or a restricted stock unit, when you become an owner from a vesting standpoint, they want their portion of when you earn those shares in their state. And that could be 3 years from now, 5 years from now. So it's kind of like deferred income, but they also want their state income tax withholdings based on how much time you were in that state during the period of time in which you earned those options or restricted stock units. So a lot of people, when you mention, hey, I want to go and work somewhere, and you get equity income and everything is done correctly, just know that equity income might be taxed in the place where you're temporarily working when you're vesting.
Yeah, that's a really good point. And I think a lot of small companies miss that. Just, you know, to tag on to that, there is software out there that companies are using to do their equity income. And a lot of that software does have programmability with respect to making sure that equity income may be distributed in California or Texas, wherever the person is at the time. But employers really have to make sure that their software is set up correctly, number one, and number two, that within that software, they are tracking where the employee is. Because just because you enter it into your HRIS system when they move doesn't mean that it is entered into that equity tracking program as well. So you have to set up processes to make sure that equity tracking and payment software. It knows where those employees are and is distributing those payments accordingly with respect to where they're working.
And Robert, to your point, and I know we got other topics, but I just want to say this for the audience. States have been very sophisticated over these years, especially during COVID, in finding out where employees are working. So if you get an audit, I'll just use the state of New York because they're probably famous or more known for this. Not only will they ask you for perhaps badging information, because most companies, if I have an employee badge and I go to another location, I'm able to use my employee badge to get access to, the entry to whatever office location I'm at. So they'll use badging information. If your company has a travel agency for which they issue tickets so you can do business travel, they'll ask you for your travel logs. And they'll also ask you for your Outlook calendar. So, if you have an admin and I'm an executive and I'm working different places, it's probably going to be on my calendar, like where I should be at. And so they also ask for expense reports from the accounts payroll department because, if I'm on business travel, I'm certainly going to have to file an expense report. And then they can track where employees may be specifically going into their state. So states have become very sophisticated in determining where source income is and when it occurred for employees. So that's all I wanted to say.
Whew. So I think the two of you, this past conversation has really highlighted the topic session, right? The name of this session, and compliance complexities. There is so much to think about. And as you mentioned, Martin, these states are highly sophisticated because they've had to be. And we know that, there's been a lot of investment made in the IRS and other bureaus to really enforce a lot of these challenges and taxation implications that are happening here. So this is important and it's complex. And I think you definitely both highlighted that significantly. So thank you for that and explaining that to our audience. But at the same time, we recognize the fact that this is such an attractive engagement tool. It's a retention tool, a recruitment tool. So how would you suggest HR and business leaders balance an employee's desire to work remotely with the challenges of ensuring compliance with federal and state regulations? Robert, please go ahead and take this one.
So I think we already touched on a little bit of it. Number one, policies and procedures in place, and make sure that we know where those employees are going to be working to protect ourselves. Number two, make sure that we're properly set up to do business and paying taxes in whatever area that the employees are going to be working. I think we also have to make sure that we are training managers and setting expectations so that if employees can't work effectively in the area where they want to work, we are putting KPIs in place to say, look, you're no longer meeting your KPIs. You've got to go back to work in the office. Because what we're seeing is often, employees are saying, well, look, it's unfair. One person got to work remotely, another one didn't, right? So we need to make sure that employees can effectively work and that we have objective data-driven metrics to ensure that they're effectively working remotely. We have to document their performance issues if they're having them, right? We need to set up reasonable accommodation processes to look at, okay, if somebody has a disability, have the essential functions of this job changed from before COVID to now, look, we understand that certain functions of these jobs really can be performed remotely. Because a lot of employers were very averse to allowing reasonable accommodation, allowing people to work remotely as a reasonable accommodation before. But now, as a society, we understand a lot more jobs than we thought can really be performed remotely, right? So we have to take that into account when doing reasonable accommodations. We have to take that into account when looking at the essential functions of the job and determining which jobs really can be performed remotely and which can't, so that we can put everyone on like a level playing field with respect to these requests, right? And treatment of our workforce generally.
And Martin, what other considerations kind of going along with that, with reasonable accommodations and really figuring out a balance? What other considerations should HR and business leaders make sure that they're thinking about?
Sure. So I think it is important for the employer and HR to understand what employees want, especially from a recruitment standpoint, a retention standpoint. But that has to come with the recognition that not all job roles in the workplace can be done remotely. You're going to have some customer facing ones that, you're at a retail store, you can't sell from a video machine, right? You got to have that in-person touch. So that just has to be balanced out. And I think people who work in those jobs that are still customer facing and can't be done remotely, like someone working in a hospital or maybe even definitely retail, supermarket, they already know what they've signed up for. So I don't think they're going to be beside themselves if they know another colleague that can work remotely is able to work remotely. So I wouldn't worry about that, but I would say for those job roles that can't be done remotely, that there should be some type of incentives for them to continue to come into work, protect themselves, with any type of COVID or any other type of, instances in which their health can be jeopardized, and there should be some type of incentives along the way to keep them engaged, knowing that they can't be working from some type of remote area. So it's just a matter of fairness. But I do think that most people who work in job roles that can't be worked remotely, they understand that, and I don't think there's going to be a lot of conflict or disruption in the workplace because of it.
That's interesting, Martin, because I've heard both sides in speaking with many of our prospects and customers. I agree that quite a few of them, I think the ones that have really strong cultures in place and other processes in place, I've heard that it's not an issue if they have some corporate employees that are working from home, whereas a lot of the frontline employees are obviously working, in the field. But I have heard from many organizations that it actually was a significant challenge, and this feeling of inequity, this feeling of unfairness. And so I was actually talking to a customer earlier this week from manufacturing who said that their entire corporate office decided to come back to the office within a couple of months of the beginning of COVID because there were so many cultural so much tension with regards to their employee base. And so I do wonder, I imagine that, as you said, it probably does depend on the job role. It might depend on geography. There are definitely some geographic implications where I heard that there are parts of the US where a lot of companies, even those who had a large percentage of their people that could work from home, they all just came back to the office very quickly. Whereas I think other parts of the US were a little bit more cautious in returning and things like that. So I'm sure there's a geographical implication as well. But I have heard that can be challenging. And so I love the fact that we're talking about reasonable accommodations, because especially if we make the case that we're going back to the office in this either fully in person or hybrid capacity, and then we're making a number of exceptions for people, that can come off in a very negative light. And we know that the negative cultural implications that can have when people have this perceived unfairness between them and their colleagues. So I think that this conversation is absolutely needed. And also with regards to accommodating challenges that come up with remote work, I just wanted to quickly touch on things like I-9s, for example, or documents that require a wet signature. What are some potential opportunities for HR to get creative here, or are there any?
Are there any? The I-9 process has been in flux, obviously, since COVID. The DHS originally, I think on May 20th of 2023, allowed employers to go through essentially a remote inspection process with the expectation that when employees would be returning to the office, the documents would be inspected in person, and then the I-9 forms would be updated. That has been extended for, almost 3 years now. But as of July this year, that temporary policy is going to be going away. I've seen some appetite at the federal level to make some kind of permanent accommodation with respect to remote inspection of those documents. I think I-9s have really been the biggest tripping point for human resources with respect to making sure that they have compliant documents for onboarding employees. You know, I think for years now, we have gotten much more used to the fact that employees may sign things through DocuSign, employees may sign their onboarding documents through UKG or whatever other HCM technology that you have, and that's perfectly okay. The biggest obstacle has really been the I-9s that I'm seeing. For employers who are going back to the workplace, again, I would just caution, you know, check that guidance from the DHS, make sure that you're updating those I-9s when employees do start coming back to the offices. Yeah, that has been challenging, I think. Hopefully we get some respite and some long-term policy changes there.
Anything to add to that, Martin?
No, he's hit the nail on the head, because even the American Payroll Association wrote to the government to ask them about some permanent solution, because that has been the one thing that tradition would lend itself was fine back before COVID, but times have changed, and you know, even the IRS has been looking at some documents that require wet signatures and how that could be kind of mitigated through other means, just based on our new world. So hopefully I-9 will follow some of these accommodations as well.
Amazing. I want to switch gears here a little bit and to kind of take a bird's eye view from what might happen when we have some people that are working in person and some people that are working from home primarily. And so we did touch on the fact that there's a range. There's a number of organizations that face no challenges when there's disparate workforces with disparate needs, right? Because as you mentioned, Martin, as a nurse, as a healthcare practitioner, a manufacturing associate, I understand that my job has to be done in person, but some organizations have had more challenges there. So there's a wide swath of things that could happen there. But do you think there's a risk of some type of proximity bias if you have people that are doing similar work and some of them are in person and some of them are working from home? Martin?
Definitely some risk. I think, you know, when we're making those decisions, we have to take a step back and make sure that we are talking to our upper management and figuring out what jobs are productive from home. We've had 3 years now to figure it out, to kind of look at, you know, structurally, how are we doing as organizations? Are there some areas that are doing better, or are there some that are not? And then when we're making the decisions, being very transparent with employees, right? Again, going back to figuring out what are the essential functions of the job, and then communicating to employees, hey, you know, if your job entails sales, you've got to come into the office. If your job entails customer service, can that be done over the phone, or is it something that has to be done in person? Really making those decisions based on objective data if we can, or, you know, if they're a little bit more subjective, making them at least consistently across the organization. Once we have made those decisions, I think there is still going to be proximity bias just because of human nature, right? If we require our managers set and communicate clear expectations regarding performance, and then I think this is what a lot of companies don't do, make sure that we have specific requirements with respect to promotions. And those are communicated to employees. Then that mitigates some of these issues because the employees know kind of where they are with respect to their performance, or what the requirements are for bonuses, what the requirements are for commissions, what the requirements are for promotions. That helps to mitigate some of these issues because we have some objectivity and at least clear expectations for employees. Martin, thoughts there? See, you know, you see it because, you know, you've got commissions, you've got bonuses, all the things with respect to total compensation that go into this.
Yes. At the end of the day, and I totally get the whole out of sight, out of mind type of, conditions that people may have. But at the end, though, we're all about kind of results oriented environment, right? Especially in this capitalism world that we live in. And what it comes down to is performance. And so, you gotta measure people's performance with meaningful metrics. And I would say, if you've met your metrics and maybe knocked them out of the park and doing this 100% remote, when you have your time for a performance objective and you get to give some type of self-evaluation, that has got to be at the top of your list. I have knocked this out of the park. And I have to tell you, if I was an employee and I had to work remote, I would make sure that I still had FaceTime. I would still have those regular check-in meetings with my chain of command, whomever that might be, and with my camera on, so they actually know that I still exist, and have those regular check-in meetings. Because, when you work in the workforce where remote work is normal, check-in meetings is just it has to be done from a leadership standpoint. Not only do I want to see how you're feeling and getting verbal feedback from you, but it is very important that happens on video, on camera. So if you have regular check-in meetings and you have some adequate, measurable, relevant performance metrics, I think that kind of tethers a bit the out of sight, out of mind. Even though as human beings, that probably still might be in the back of your mind, but not as heavy.
Yeah, I think that was really good. When there's a little bit of a difference when we're looking at kind of like, what can we do for an organization? And then what can we do on a little bit more granular and individual level with respect to ensuring there's no bias in general. When we as organizations are looking into doing performance reviews, or when we're looking to doing terminations or disciplinary warnings, again, like Martin said, it's really important to focus on measurable productivity. And so often, what HR deals with is managers who come to them and say, this person is not a cultural fit and I don't want them on my team anymore. Or why don't you want to promote this person? Well, their peers don't really like them that much. And as managers, as HR, as organizations, we really have to be diligent about drilling down on things like that, on feedback like they're not a cultural fit, they don't get along with people. Because often when you go and ask people why, it's because John isn't a cultural fit because he threw a stapler at Dave's head last week or something, or he doesn't show up to work at all. Okay, well, that's very different from this person is not a cultural fit, right? That is a measurable performance standard. You're showing up late to work every day, or I jest, but arguing with people, yelling at people, not responding to emails, not showing up to team meetings. These are all like much more measurable performance, metrics that really tell the full story of, for example, why someone is not going to get a promotion, right? So, when we're looking at things on a more granular basis, it's very incumbent upon us to get the facts behind why someone might not be promoted for social, communicative, teamwork reasons.
That's so interesting. And thank you both for that background. I think you hit the nail on the head in terms of it, Martin. I love the pay for performance. One challenge that I do oftentimes hear from HR and business leaders, though, is that they are struggling to implement that, right? That they want to have a pay for performance culture. They want to make sure that they're measuring people on the right performance indicators. And sometimes that can be very obvious, but sometimes it's a little bit more challenging to determine, okay, how exactly, what is the performance that we're looking for here? And even though, again, I hope that we have goals and objectives and these great KPIs that we can point to, but sometimes I do know that managers can struggle with that challenge. So I'm wondering if either of you have any advice for managers specifically in terms of how to make sure that we are creating measurable objectives that ultimately grow the bottom line, rather than some of these more, I would call them surface level KPIs.
Martin, I think that's a good question. I think that's a good question for you. I'm going to punt that one to you.
Oh, that's fine. I appreciate that. I would say, when we talk about performance metrics, we usually talk about efficiency and effectiveness. And whenever we talk about efficiencies, it's always quantitative, like cost per transaction, right? That's in HR. It could be cost to hire or time to hire. It could be turnover rating, or whatever that looks like. But it has to be some type of measurable, quantitative type of thing that someone can actually measure and not be subjective. Because, as a leader, I always say to myself, if I'm going to make a decision, I want to be able to defend it. And it's hard to kind of spin on these non-discretionary type of metrics like what we're talking about right now. Now, the effectiveness part of it, the effectiveness may be, I just implemented a new policy and I want to see how effective that was. Do we have more people going to employee self-service, for example, than not? Because we know it's very costly when we have to have a human being do something versus having that be done on the same employee self-service type of experience. So effectiveness might be also, how well do I work with other people and my cross-functional partners? So, there are measurable metrics, some effective, some efficient, and both of them can be fair. And when you think about it, if I'm an employee and I don't like what you just gave me as far as my performance, we always have to be able to answer why. I think it's critically important for leaders to be able to answer why someone got whatever they got. And it shouldn't be subjective at that point, because, that's when things start to go south. So you think about that, because, when employees, become subject to corrective action, that's when everything comes to light. You better have documentation. It better be that you've, determined that I have not adhered to a policy or something. That all has to be documented. And none of it is subjective. It's always quantitative. It's always, something you can put your hand on, tangible, and then make some explanations to whomever it is that's asking these tough questions.
Yeah, Martin, I think that's great. One of the things that certain industries see is this problem of falling into giving people goals. Hey, your goal as a software engineer is to build this function. And then the person gets rewarded for building the function. But then the company as a whole doesn't take the steps, the company or the individual doesn't take the steps to make sure that they're evaluating the effectiveness of what the person has built. And it's a problem that a lot of companies run into who are, for example, tech companies. They get stuck in this build trap. We're going to build something, and then we're not going to look at the metrics of how well it does. And so then the compensation is just based on, you met your goal for that quarter of pushing out whatever the company decided that you should push out. And there's a little bit of a catch-22 there, right? Because if you look at the effectiveness, or if you measure how well that thing did that the person built, a lot of times they didn't really even decide they didn't decide to build it. Somebody way up above them decided, hey, this is your goal. This is what you're supposed to do. So I think some companies run into that problem just because of the way that they're structured in their compensation systems, right? They are designing their compensation system to reward employees to do a specific thing, but then not rewarding them for the business effectiveness of that thing that they did.
That makes so much sense. And I want to segue here a little bit. It's related, but a slightly different take. So we're talking a lot here about performance. We're talking about measurable performance, right? What are the statistics? What does the data say so that I can back up any decision that I make? What is the role of employee surveillance in this conversation? And how has that adapted over the past couple of years to evolve alongside hybrid and remote work? I'm curious, Martin, what have you seen in that area?
So I do know that's a sensitive topic, right? Because we talk about someone working from home and employers having the ability to figure out how long they've been on the system, even in a particular application versus just pressing a keyboard and showing themselves active, but not really doing anything, right? So I do think, I know it's controversial, but I have to tell you, if you have employees working from home and they have, you know, caregiver responsibilities, it's going to be very clear that they're working from home and they're not really working, right? And we go back to metrics again because their productivity is going to suffer. And so, you know, if somebody gets a phone call and says, "Hey, Martin, you know, your productivity is down. You've done half the work that you normally have for this whole past 4 weeks. Why is that?" That's a fair question, right? And I think if employers are going to tell employees that, hey, there are ways that we can measure if you're actually doing productive work, and then we'll wait for the metrics later, that's fair for them to be told that up front, because we're just keeping people honest. And I think that's fair. If the three of us had a business and it was, I don't know, telemarketing or something, and we had the same instance happen to us, we definitely, as a small business, we can't afford to pay people who aren't working when in fact, you know, they're just doing half the work because they're not being productive. So I don't see anything wrong with it. I think it's a fair assumption that people would expect for an employer to, if they're going to be given the privilege to work from home, that they should be productive in doing so.
I agree. I'm curious, are there any compliance implications there, though, Robert, that we need to be aware of?
There are. I would like to take a step back first before talking about the compliance issues. It really is entirely dependent upon your employee population, right? And what your culture is. There's different ways that employers are going to control employees, control and direct the work of employees. Number one is typical hierarchical structure, right? Where employees are controlled by their manager. That is, you know, what we've seen for the last 150 years. And we as employers think that if we extrinsically motivate employees through management feedback and through compensation, we will get the work that we want out of them. Studies in the last 30, 40 years have shown that that can be problematic for some employees, right? So if you have employees doing very routine activity, high degree of control can be rewarding. If you have employees doing a high degree of creative work, then a high degree of management is often going to be counterproductive. So in those workplaces where you're using or where employees are controlled more through the culture, more through their peers, or more through kind of like professional reputation, then it probably doesn't make sense to impose like a keystroke logger on them, for example, right? If you're looking at an attorney, if you're looking at a university professor, that is not going to be something that is going to impact positively on their desire to do work for you. So
I love that you mentioned that.
Really important to look at the employee population that we are using these things for, even for customer service. Martin, I'm sure you're aware of this, but the Zappos case, right? Zappos is all about customer service. They deliver shoes, but like their platform is they have the best customer service. Yeah. And they are historically known for implementing a holacracy, which is basically employee control. So they don't want top-down hierarchical control, but at the same time, they have the best customer service like in the country. So it really, a lot of it depends on how you can shape your company culture and how you want to control those employees.
It's just to jump in there, I just want to mention, because Martin and I actually had this conversation a few weeks ago. We were talking about some of these challenges, and I was saying similar. I'm like, you know, my keystrokes per minute are not at all indicative of the value that I'm providing my organization. And so I tended to be a little bit more against some of these employee surveillance tools. And then Martin was like, well, that makes sense, but what about for your customer service population, right? When your service really is dependent on how long it takes for them to respond to an email from a customer. And so I absolutely, I think it does depend on the employee population. And in many cases, the term that I love to come back to is outcomes over hours, right? What are the outcomes? And again, I think that really speaks to what we've already been talking about here for most of today is how do we measure performance if we are using, with that part of the discussion, how do we really make sure that we're measuring the right things?
Right.
And that's true whether we have people that are in person or whether they are at home. And so we only have a couple of minutes left, but I am curious to hear about the compliance challenges of surveillance.
Okay, so pretty much anywhere you go, when you are being surveilled, there is going to be a balancing act there. What's your reasonable expectation of privacy at that time versus what is that surveillance doing? So if I go into work and there's cameras there, I'm in a warehouse, I understand that I'm being surveilled, right? I'm in a public place. But if I'm at home and my employer installs a video monitoring system on it and does not tell me, that's a completely different implication for my reasonable expectation of privacy, right? So we want to make sure we're looking at, are we being transparent? Are we doing more than is necessary to monitor those employees? So could I do a keystroke logger, or do I need to have a camera on that person, right? Employers that are in California, look at the California Privacy Rights Act. There is a very large movement towards more data privacy regulations in the US right now. Every state that has passed a comprehensive data privacy regulation has carved out employees from that, except for California. So if you have employees in California and you're thinking about implementing some of these systems, make sure you check with legal counsel. Look at what you're doing, look at whether that needs to be there needs to be notice, there needs to be opt-outs, there needs to be employees who can request that you delete whatever information you're collecting on them. Be very careful there.
Fantastic. Thank you so much for that. This has been such an informative session. I really appreciate both of your time in walking us through these critical issues. This is such a rapidly evolving area of compliance and of the world of work today. And so this has been absolutely invaluable. Thank you both so much for your time and expertise. We do have contact information there at the bottom. Please feel free to reach out to us if you have any questions. And thank you again for your time.
Thank you, Martin, Karina, and Robert for such an insightful session. This concludes today's webinar, and I want to thank everyone for joining us today for this excellent virtual event, and thank you again to our partner, UKG, and enjoy the rest of your day.